Hey there designers, I'm Holly Skog, owner of Happy Book Solutions, where we demystify the finance side of your interior design business. Today we're diving into a topic that I know can feel so overwhelming. That topic is sales tax. I would say sales tax is one of, if not the most common area where designers run into questions, and you are not alone if the mere mention of sales tax kind of makes you want to cry a little bit. But no fear, by the end of this video, I'm hoping that you'll feel at least a little bit more confident about how to handle the sales tax in your design business. We're going to cover what I've determined to be the 9 most frequently asked sales tax questions I get from designers just like you. So whether you're new to the business or expanding into new areas, this video should help clarify how to stay compliant and keep your business running smoothly. Let's dive in. First question we're going to ask is, what's the difference between a business license, a sales tax license, and a resale certificate? This is one of the first things you'll need to understand as a business owner, and it's easy to mix up these terms. So let's break it down one by one. A business license. This is basically your legal permission to operate your business. Most local governments, whether at the city, county, or state level, will require businesses to have a business license. It's typically one of the first things you'll do as a new business owner. It doesn't inherently have anything to do with sales tax, but it does allow you to operate your business. Like I mentioned, it's basically just legal permission to operate your business. Different areas are going to have different requirements and sometimes different types of licenses depending on the kind of work you do. So you're definitely going to want to make sure that you're checking with your local government office when you are setting up your business. A sales tax license. Once you're up and running, if your state requires you to collect sales tax, you'll need to get a sales tax license. This is what allows you to collect sales taxes from your clients on taxable goods and services and then remit, which is just a fancy word for send, the funds to the state. In some cases, if you work across state lines, you may need multiple sales tax licenses for different states, but we'll get into that in a later part of the video. A resale certificate. This is an important one for interior designers. Once you have your sales tax license, a resale certificate allows you to buy goods, think furniture, lighting, artwork, without paying sales tax upfront. The idea is that if you're going to resell these goods to your client, collect the tax from them, and send it to the state yourself, then you shouldn't pay sales tax to the vendor. We highly recommend using a resale certificate whenever possible, because anytime you're paying sales tax to vendors, it makes your sales tax situation extra confusing. To sum it up, your business license allows you to operate legally, your sales tax license lets you collect and remit sales tax, and your resale certificate helps you avoid paying sales tax upfront on items you'll resell to your clients. Each of these tools serves a different purpose, but they all play an important role in keeping your business compliant. Our second question today is, what should I even charge sales tax on? So once you have your sales tax license, you need to understand what exactly you should be charging sales tax on. The thing about this is that it can vary quite a bit depending on the state you're working in, and even within your state, different rules may apply to different goods and services. So it's hard to answer this question on a broad scale because you should definitely research your state's rules specifically, but here's a general breakdown. As far as products, these are the most straightforward. Things like furniture, rugs, lighting fixtures, artwork, pretty much anything tangible that you are purchasing on behalf of a client and delivering to them is usually subject to sales tax. In other words, if your client is going to physically use or own an item, you're probably going to need to charge sales tax on it. Services is where things get a little tricky. Some states require you to charge sales tax on certain services, while other states don't tax services at all. For example, in some states, if you're charging for design consultation, project management, or installation services, those might be taxable. In other states, one or all of these exact same services could be exempt. Here's a tip. Break your invoices into clearly defined line items. If you're charging for both goods and services, it's important to separate them so you know which items are taxable and which aren't. Not only does this help with compliance, but it also makes it easier to explain to your clients why they're being charged tax on certain items. Also, keep in mind that shipping charges might be taxable in some states too. For example, if you're shipping a piece of custom furniture to a client, the sales tax might apply to the shipping cost as well. I know of someone who learned that her state taxes shipping while she was undergoing a sales tax audit, and she got dinged for it. Always double check your state's rules on this to avoid any surprises. Our third question is, how do I know which rate I should use when charging sales tax? Sales tax rates can be tricky because they vary not only from state to state, but also from county to county and even city to city. Here's how to make sure you're using the right rate when charging sales tax on your projects. First, you need to understand destination-based versus origin-based sales tax systems. In most states, sales tax is destination-based. This means that you charge sales tax based on where the goods are being delivered or where the project is located, not where your business is located. However, a few states are origin-based, which means the sales tax rate is determined by where your business is located, no matter where the goods or services are delivered. Second thing that you need to do is check the local rates. The next step is to use the appropriate address to determine which sales tax rate to apply. Most states have a sales tax rate calculator where you can input the address and it will give you the applicable sales tax rates. This tool is super useful. If you're in an origin-based state, this is pretty easy because any sales you make in your state will be subject to the same local tax rates. If you're in a destination-based state, which is most states, we highly recommend using this tool as part of the onboarding process of every single new project. This is because sales tax rates can vary within a state. Some cities or counties have their own additional sales tax rates, which are added to the state rate. Always make sure you are charging the correct combined rate. It's not just about the state tax that you need to worry. Double check for different types of transactions. If you're billing for goods, services, or a combination of both, make sure you know whether each part of the transaction is taxable in the location where you're working. This is important because services might not be taxed in some states, but goods usually are. A pro tip for you is even if you're working on a project remotely, the location of the project or where the goods are delivered determines the sales tax rate. So as long as you're in a destination-based state, you're always going to go by the client's address or the project's final destination, not where you're physically sitting while designing. Our fourth question is, how do I know if I have a sales tax nexus in a state? If you're working in multiple states, it's really important to understand the sales tax nexus. Nexus is essentially your business's connection to a state, and once you have that connection, you are required to collect and remit sales tax in that state. There are two main types of nexus to be aware of. First is physical nexus. This is the traditional type of nexus where if you have a physical presence in a state like an office, a showroom, or even employees, then you have physical nexus in that state and you're going to need to collect sales tax on any taxable sales that are made there. Even if you're doing an installation or renting a temporary space in another state, that might trigger a physical nexus. Economic nexus is where even if you don't have a physical presence in a state, if you meet a certain sales threshold, you're still required to collect sales tax. Most states set this threshold at around $100,000 in sales or 200 transactions per year. So if you're shipping goods to clients across state lines or doing remote design work, you could be creating an economic nexus without realizing it. We highly recommend looking into a state's nexus laws right away when you begin working in any new state. Each state has its own Department of Revenue website, which is a good resource for understanding their requirements. Otherwise, you can always give the state's Department of Revenue a call, and they should be helpful in helping you determine whether you have sales tax in their state or not. Question 5 is, what should I do when I begin a project in a new state? If you're starting a project in a new state, the first step is to determine whether you have a sales tax nexus there or not. If you do, you're going to need to register for a sales tax license before you start collecting sales tax from clients. Never, ever collect sales tax for states in which you are not registered to collect. Here's a quick checklist of what to do when you meet the nexus threshold. First, you want to register for a sales tax license in that state. Each state has its own registration process, typically through their Department of Revenue or tax authority. The process can take a little time, so it's a good idea to start early, ideally before you begin collecting any tax. Second is to understand the taxability of goods and services in that state. Just because something isn't taxable in your home state doesn't mean it's the same in other states. Some states tax services, some don't. Some states tax shipping, others don't. You will want to be crystal clear on what's taxable and what isn't before you send your first invoice. Third is update your pricing and invoicing systems. Make sure your accounting software or invoicing system is updated to reflect the correct sales tax rate for the new state. As I mentioned earlier, one of my favorite tools is the address lookup that's on most states' Department of Revenue websites. Remember, it's always better to be proactive with sales tax compliance. The last thing you want is to get halfway through a project only to realize you haven't been collecting the right tax, or worse, that you haven't been collecting it at all. Question number 6 is, how do I report and file my sales tax? Okay, you've registered for a sales tax license, you've done all the research to know what is and isn't taxable, you've collected sales tax from your clients. Now what the heck do I do with the cash I'm holding? This is where your sales tax filing comes in. This is a report you fill out on a regular basis that tells the state what your sales were and how much sales tax you collected, and then obviously you'll remit that sales tax to the state. Each state has its own filing requirements, and how often you need to file usually depends on how much sales tax you collect. There are typically 3 filing frequencies: monthly, quarterly, or annually. The frequency is usually assigned by the state based on the info you provide and what they know about your business. If you're not sure what your filing frequency is, you'll absolutely want to give your Department of Revenue a call and make sure you're not missing any filings. One important thing to note is that even if you don't collect any sales tax during a filing period, you still need to file a 0 return. Failing to file a return, even if you didn't make any taxable sales, can lead to penalties or late fees. So mark your filing deadlines in your calendar and set reminders to make sure you never miss a filing. I also recommend automating as much of this as possible using your accounting software. Many systems will generate reports for you, so all you need to do is double check the numbers and then submit them. Question number 7 is, how should I handle sales tax paid to vendors in situations where they don't accept my resale certificate? Occasionally, you might run into a situation where a vendor doesn't accept your resale certificate and they charge you sales tax on an item that you plan to resell to your client. While it's frustrating, it's not the end of the world. Here's what to do in these situations. First option is to record the sales tax as an expense. Since you've already paid the sales tax, you can't charge it to your client again, so instead you can treat it as part of the cost of the item in your bookkeeping. You're going to want to check with your bookkeeper or tax preparer as to how best to reflect this on your books. Another option is to check with the vendor. Before you give up on the resale certificate, it's worth checking with the vendor to see if there's a reason they didn't accept it. Sometimes it's just a matter of resubmitting the certificate or making sure they have the right paperwork on file. Another option is to apply for a refund. Some states allow you to apply for a refund if you've paid sales tax on items you intended to sell. This process can vary by state, and it usually involves filing specific forms with your Department of Revenue. The refund process can take time, but it's worth looking into, especially if the tax amount is significant. It's always a good idea to work with vendors who understand resale certificates and are willing to accept them. But when that's not possible for whatever reason, being diligent with your bookkeeping will help ensure these extra costs don't get overlooked. Question number 8 is, what happens if I don't collect sales tax on a taxable sale? And what's the difference between sales tax and use tax? This is a big one. If you don't collect sales tax on a taxable sale, either you or your client will still be responsible for that tax. This is where it gets interesting. Depending on the situation, your client might actually owe use tax instead of sales tax. Let me break it down. Sales tax is the tax you charge to your clients when you sell them taxable goods or services. You are responsible for collecting it at the point of sale and then remitting it to the state. Use tax often comes into play when sales tax wasn't collected at the time of purchase. It's essentially a backup tax that states impose to ensure they're still getting revenue even if sales tax wasn't originally charged. For example, if you're working on a project in a state where you don't have nexus, any items that would normally be taxed to the client would be subject to use tax. Your client didn't pay sales tax on that transaction, but the state still expects its cut. If you're working in a state where you don't have nexus, we generally recommend noting on your invoices to your clients that purchases may be subject to use tax. Now, if you fail to collect sales tax on a taxable sale to your client, where you're supposed to collect the sales tax, here's what can happen. You'll need to pay the tax yourself. If you can't go back to the client after the fact and ask them to cover it, you're on the hook to pay that sales tax to the state, which can cut into your profits. In situations where use tax applies, if you purchased an item without paying sales tax, perhaps from an out-of-state supplier or a vendor that didn't honor your resale certificate, you'll likely owe use tax to your state. It's your responsibility to track and report these purchases on your sales tax return, and not doing so can result in penalties. Another consequence could be penalties and interest. If you don't remit what's owed, you'll face penalties and interest. These fees can accumulate fast, so it's important to keep good records of all taxable transactions and file returns on time. In fact, some states even give you money for filing on time. The bottom line here is that sales tax applies when you're selling taxable goods or services to your clients, while use tax applies when you sell taxable items to your clients but don't charge sales tax at time of purchase because you're not required to. Make sure you're tracking both because states are pretty serious about collecting their taxes, whether they're labeled as sales or use tax. Question number 9, can I recover sales tax if I overpaid on a project? The answer to that is yes, you can. If you've overpaid sales tax, maybe you've mistakenly charged tax on a non-taxable service, or you overestimated the sales tax rate, you can usually recover that money, although the method will vary depending on your state. One option is to file an amended return. Many states will allow you to file a corrected or amended sales tax return. This might be something you can do when you file your next return, or you may need to file a specific form to reflect the correct amount. Typically, if you are filing an amended return, the amount that you overpaid will just be credited to your account and possibly will be credited to future sales tax filings. Although in some states you might need to request a refund, where if the overpayment is significant enough, you can often directly apply to the state for a refund. This process can take a while and you might need to provide documentation like invoices or proof of payment, so be prepared for that. Our pro tip here is to always double check your sales tax filings before submitting them to make sure you're charging the correct rates and amounts. It is so much better to catch a mistake early and fix it rather than leaving money on the table or dealing with a headache down the road. It's especially important that if you're going to make a mistake, please just overpay your sales tax instead of underpay, because if you're underpaying, you will very likely be subject to a lot more significant penalties and fees. I hope this video has helped clear up some of your sales tax questions. I know it can be so tricky, but staying on top of these details will save you from a lot of stress and it will keep your business running smoothly. So if you still have questions or if you need personalized help, please feel free to reach out to me and the team at Happy Book Solutions. I'd love to chat with you and help you get everything sorted out. Don't forget to like, subscribe, and hit the bell to stay updated on all things finance for interior designers. So thank you for watching, and we'll talk to you next time.